All right, welcome back to another episode of Asset Coach and Tax Strategist. Thanks so much for being here. Wow, just so much has been going on since our last recordings, and we're in an amazing period of our country, this transition. And at the time of this recording, we're after the inauguration. Trump is in office, and getting to work, working for the people. Today's episode, we want to focus on high inflation. These are numbers that came out in an article early January. And so obviously at the time of this recording, we now have a change in administration. Trump was inaugurated. He's now getting to work and doing the things that he campaigned for and other things that popped up. So, and again, at the time of this recording, I don't know what those things are going to be if I'm recording. I've already recorded and I can't tell the future other than things are going to happen. So let's go ahead and share my screen. And I'm going to share my screen and we're going to talk about high inflation. Okay, so remember our episodes about economic termites. And we have four main termites: taxes, inflation, time, and laws and regulations. Laws and regulations is the worst. That's our politicians making rules and laws and regulations that affect our assets, affect our wealth. Okay, and sometimes that eats away at our time because now their laws and regulations change the effect of how our money can grow or assets can grow based on regulatory issues or whatever occurs. Also could cause inflation. Which is what's happening here with we've been in a high area of inflation since the end of Trump's first term and into Biden's administration. And it really seems like over the last, since 2020 to now, that the government just has been printing money. It's not a government of governing its people and protecting its people. It really has felt like it has been a government of printing money and giving it away for all these other things and issues that we don't stand by. This conversation we hear about warmongering, and sure, investing in war does generate a economy that can be spurred in growth because of manufacturing. But that was also during a time, that mentality was also during a time where we did a lot of the manufacturing on U.S. soil. I know we're doing more and more back on U.S. soil, which I think we should. But the reality is that war is not necessarily a money maker for long-term perspectives. Okay. It does have its costs. Now, we don't like to look and think about its costs because then that means we have to second guess and look at the human aspect of what we're doing to other humans. And we are a mean and can be a very evil creature mammal. But all of this last 5 years of printing money and now putting all this equity, liquidity and this money into the economy, if it was all in the U.S. economy, that's what's going to create the high inflation. But now we have so much money going outside of the U.S. economy that doesn't necessarily benefit our economy. And so either way, high inflation is entering a fifth year. This is published as of January 13th of 2025. And this is on Investopedia's website. Okay. So some takeaways: it's set to run above the Federal Reserve's 2% annual target. So just in case you didn't watch any of my previous episodes on economic termites and the inflation episode, is the Federal Reserve has a 2% annual target goal. They figure that the economy should be growing, should have inflation of 2%. Now, this has a handful of different functions and data endpoints that generates that 2%, but we're been above that. High inflation has roiled the economy and household budgets since the U.S. began recovering from COVID-19 pandemic in 2021. Again, a man-made issue that man really created more of an issue doesn't mean that people didn't die of COVID. I'm not saying that. I'm not saying that COVID is something that was made make believe. No, it was real. It was made by man. It was real, and the leadership and the men who ran and discussed how to address COVID made it worse. And so this is not a political conversation. We're not getting into politics. This is a human speaking of the evil and the meanness of humans as a mammal. Inflation has fallen from its peak from 2022, so that's good. It has shifted a bit. Now, the problems with global supply chains were mainly responsible for recent inflation. Experts have warned tariffs imposed by incoming presidential Trump could drive prices up. Now, this, Trump's point on tariffs. Now, let's talk about Trump, because people, you just bring up the name and it just creates both sides of the aisle of, But Trump's a negotiator, and he knows tariffs. He knows the United States is what drives the world economy, our consumerism, right? That's my other previous episodes. If you've watched any of me talking about China, you'll know, talking about the BRICS, right? The de-dollarization. Everything I talk about is the U.S. and our consumerism is what drives the world economy. China is what it is because they manufacture for us, because we want to purchase as consumers goods that are less. We have companies that all want to lower their expenses, have higher sales, and improve their margins for shareholders. Okay. And so anybody who complains about what's going on needs to go look at their retirement account, go look at the investments in the companies they own in the mutual funds in the retirement account, and either sell it or shut up. Okay. Because this is how third world countries provide for their third world country. This is why charitable organizations in the United States have the funds to be able to go to these other third world countries and help minister to those folks. Okay. The world exists. And I'm not saying, oh my goodness, if something happened to the United States, the world would implode. No. Physics, no. But would we go into a financial desert? Absolutely. Absolutely. We've built this system over a long period of time. This system has been built before the United States became the United States. This system existed before. It just was in kingdoms and serfdoms and in their own little structures. As the world evolved, the United States helped push that, which is why so many people from other countries come here. Again, not to make this about politics or anything like that, but tariffs are a negotiating function. Other countries don't want to pay higher taxes or be taxed to be able to sell us goods and services. Okay. And to Trump's point, before the income tax, this is how the government made money. This is how they made money. And because we're a free economy doesn't mean other countries have a free economy. China is a communist country. They control what goods and services are allowed in their country. Countries get to control what they do in their country. Because we live here with this free mindset and this, we feel like everybody's like that. No, that is not the case. So anyways, as we go through this, we need to understand and realize that our current inflation, and once again, the Federal Reserve would call it transitory. Okay, but it was just a fancy term of saying, yeah, we're in a period of high inflation. It's just temporary. Well, that's what inflation is. That's your job as the Federal Reserve is to fix it. But because we printed so much money, trillions of dollars to affect the COVID, and even up to today with other issues that are going on with the previous administration, we're addressing these inflationary issues. And quite honestly, guess what? Interest rates and inflation is probably going to be about what it is for the next, I'd say, 5 to 6 years anyways. Trump's going to have a good effect on it. We're going to make some changes, but you can't just eliminate trillions of dollars in the marketplace, or you can over a period of time. Okay. And how do you do that? Carefully. And one way that the Federal Reserve does that is with interest rates. Okay. And they've used, I think, the tool of interest rates as best as they can. But the reality is that the human spirit, the world economy is still going to produce and be productive, and that's going to cause inflation also. Okay, when you have economies like the California economy and they change minimum wage to $20 an hour, that creates inflation. Okay, that had nothing to do with printing money. That had to do with bad governing. When the state of California makes decisions that they make that financially handcuffs the state, then what happens? It causes inflation. It causes the economic issues. Oh, but we're California. No, your name is California, but you are not what you used to be. Okay, you are no longer a prom queen. It's not it anymore. You're now a 70-year-old who used to be a prom queen, but now you're a 70-year-old. Nothing against 70-year-old prom queens. But the reality is that's the past, California. And the reality is that you've done a shit poor job. You've done and how do you know that? The amount of people leaving you. If you did not look at immigration as part of your population numbers, you'd be hemorrhaging. And you already are. And that causes inflation. Okay. When California, we were just back there visiting, and California ended up had a bird flu in a couple chickens or something like that. I don't know the story. I haven't read it, but this is just from family and friends telling us what happened, that they killed 2/3 of the chickens because some of them got the bird flu. And so guess what people are having a hard time getting? Eggs. Can't get eggs. And now they're talking about possibly slaughtering a bunch of beef and cattle. What are you doing? I just bought a ribeye at the grocery store for $22. $22. I mean, that is not 2.5% inflation. It's not. When you're buying a dozen eggs at $8, that's not a 2.5% inflation. Okay. In California, gas is still between $4.50 and $5. In Texas, it's still between $2.50 and $3. What's the difference? California. California's the difference. So states like that around the country have an effect to all of our numbers. And so if you're in a state like California and you see the Federal Reserve inflation numbers come out at 2.5, you're like, as if, exactly. And so if you're retired in California, you almost have to sell your house, which the inflation has helped your house because of the decisions California has made in how they're building homes. That has helped the price of your house to be worth what it is. But it's still supply and demand. And if California pushes a lot of the buyers out or creates an environment that buyers don't want to buy, they don't want to be there, you have to rely on foreign buyers. And so the reason why California had been, and their real estate has been the way it is because of foreign buyers. Chinese coming and paying cash for homes to get their money out of China and into the U.S. And it can't be in U.S. banks. It has to be in physical property. That's why they buy cash houses for cash. And the more the better for them. And if you're sitting there as a retiree selling the house that you bought for $150,000 30, 40 years ago, and now you're selling it at $1.3 million, you're going, really? Over the years, that's the appreciation. If you still look at the numbers, it's still about a 4 to 5% appreciation value on an annual basis. Is that a good investment? I don't know, right? But at the end of the day, it's helps and you move to another state, like a lot of the states that are receiving a lot of these folks transitioning from blue Democrat ran states to more Republican ran states. That's why you have Florida is increasing, Tennessee's increasing, Idaho's been increasing, Texas has been increasing, Arizona and Colorado have been increasing. I'm not sure why people from California move there, other than other liberals getting out of California going to liberal states is the only thing I can think of, which is okay. There's a place and there's a home for everybody, right? But it doesn't mean that all of a sudden your location in Colorado is going to be better. This doesn't mean that it's not going to turn into California. Okay, it could, based on decisions, because now you have that bread. Birds of a feather flock together. There's a reason for stereotypes. We can keep going down all these different cliche sayings, but at the end of the day, if you want change and affect change, you got to change. You got to change. You got to be different. You got to make different decisions. But you can only do that if you do that self-analysis and realization that I need to change. Okay. So that's how inflation is going to be changed, is by us making changes and differences and understanding in the politicians, and they affect remember, economic termites: taxes, inflation, time, and laws and regulations. And laws and regulations, our politicians are the ones that drive those three. Okay. There's a fifth termite, debt, but debt is really effective of those other four termites. And debt is dependent on what type of debt. Are we talking about personal debt or business debt? Right? There's a different effect and mentality of what debt is. So that's why we don't spend a lot of time talking about debt as an economic termite, because we look at it from a positive use of leverage to grow and hedge taxes, hedge inflation, hedge time, hedge our politicians. So we use debt in assets to hedge those economic termites, to stay ahead of them and to not allow them to affect our wealth negatively, but to affect our wealth positively. Okay. It's a mentality. Okay. It's a mentality. And if you don't understand what I just said, do yourself a favor, go read Robert Kiyosaki's book, Rich Dad, Poor Dad, and then go read his book, Cash Flow Quadrant. And those two books will give you a good baseline and understanding of what I just said. Okay. If you don't want to do that, check out our YouTube channel, go look at our other episodes, and we walk through all those concepts in this channel. So thanks so much for investing your time with us and spending your time with us. Yeah, if you're not subscribed, go ahead and subscribe. Give us a thumbs up if you like our content. Add any comments down below for any other topics that you want us to talk about, and go make it a blessed and great day.